And welcome to the briefing for Monday the 7th of November. Going to start a little earlier than normal just so we can catch up with market events, and just given the fact that the market's already obviously seen a substantial move following the news that broke late last night about the details and confirmation that the FBI not to recommend prosecution of Hillary Clinton following the handling of emails during her tenure as the Secretary of State. So late last night, for any of you who haven't caught up with that news as yet, they'll maintain the same conclusions as those expressed in July, and that no new evidence has been found to warrant charges. And clearly this has been a huge lift with just really 24 hours to go now until the election, and that's what is causing the flight, or the, I should say, risk-on mode this morning that you're hearing much of the television networks referring to. So gold has gapped lower, likewise in fixed income, and equity markets, a pretty substantial move to the upside initially here. You can see defined here with the S&P and also the DAX. So certainly it's alleviated a lot of the tensions of which we had, if you remember, I think it was Tuesday last week, when we had that ABC News poll, and when Trump took that first 1 point lead. That's the first time since May of 2016. This obviously was in the backdrop to the FBI reopening that investigation into Clinton. That was when the polls converged, and if not, Trump took a slight lead in a number of the national polls, as well as the state-run ones. But this will come as very much welcome relief, and that's what's being played out on your charts. This morning, the Mexican peso rallying over 2% overnight. A quick look at the most immediate kind of fluctuation in expectations, the bookies odds. You can see the most aggressive spike that we've had to the upside in favour of Clinton throughout this whole last 6 months really. And we're back up towards pretty much the highest point of probability on that regard that we've priced so far at 82.3%. So the margin back wider to where we were probably around a week ago or so, before that initial investigation was reopened. A couple of questions from the guys then in terms of, we've had this big gap up, let's say the DAX. Do I think that that's going to be sustainable? Well, the first point of call that I would generally look at is defining how big is the gap up. And actually it's not that big when you look back on the charts. I mean, it only takes us back to really it's last Tuesday, so it kind of just replaces where we were from the ABC News poll. And as such then, do I think that this DAX can just continue to just punch higher? I would say that's a little bit questionable, because at the end of the day, there's still a high degree of uncertainty and a high probability that Trump could still seriously win this election tomorrow night. And so I would say that the gap up that we've had is reasonable. Do I think that that's the end of the downside to come? I would be more biased to say no, because there isn't still an inherent risk associated with the main event coming up. Looking at the S&P, it's a similar kind of deal. If I put it on a daily continuation chart, we've just come back to really that 27 level. That was that key level of support on which we had back in mid-September and mid-October that acted as that double bottom before we broke that really as well. That was the trigger as well when Trump took that lead in that ABC poll, and we've just come back to exactly that level, no higher. So that's quite significant, that 07 there. And for the time being, that's kind of the pricing point and where we're sitting. I would definitely be looking out though for more polls to come out, and certainly those coming out now and going forward over the next 24 hours are likely to also pick up the sentiment that's come out of this latest news development. So I would be expecting a greater margin to materialise as we go into the voting day, and that's barring any last minute mishaps that either come out in regards to Clinton or if the Trump campaign pushes anything any more mudslinging in the way of the Democratic Party. So I'd be a little bit cautious here to just be thinking, this is it, that's the end of it, it's a done deal Clinton. I do not think that that's the case. I think this is kind of a bit of a relief. Maybe we're back to the status quo of most are expecting Clinton to win. That really hadn't changed. That was always the kind of main consensus view. This is just what's happened, ratified that with a slight bit more conviction. However, there is still not going to be any complacency about the what-if scenario. Likewise then, T-notes have already started to grind up a little bit back towards the 130 handle after that initial gap down that saw a low tested at the day's S2 down at 25. Looking at some other charts then, that website which is going to be closely followed throughout the night, 538.com. That's the one run by the chap Nate Silver, an influential guy who monitors the polling and his various different models to look at predictions as to who is going likely to win the race on Tuesday night. And on the polls only forecast, Clinton still seen around a 67% probability. I would say this is pretty good fair value. I'd say how the market is probably positioned at around a 30-35% probability for Trump. So that's no small mean. Is at a small margin. If you think about it, I'd say in a Brexit on the day before and all the way up to when the polling booths closed, we were priced at about 90-10 to give you some ballpark figure. So the 10 for leave is probably about 33% for Trump. So certainly not underestimating the protest vote. Looking at quickly elsewhere and what we have seen, we've had German factory orders this morning, but I think in the context of things that's pretty insignificant really. As a data point, it tends to fluctuate from positives and negatives, and so the fact that we had a figure of minus 0.6% was quite a bit weaker than expected, 0.3, but I don't think that's really too much of a great concern at this point in time. The market's more focused now onto the countdown for the election. Looking at the day itself then and how it's structured, it's quite a quiet day actually, and it's a quite quiet week overall. The election in the run-up today, I would imagine markets could well be fairly confined in a wait-and-see fashion. I would definitely keep an ear open for any polls that break on the squawk, but I would say that they're probably likely to err more on the side of a continuation of support behind Clinton going into the final voting day. Otherwise, looking at the US session, there's not really much out. Certainly nothing. The CB Employment Trends Index, consumer credit change, nothing that the market is going to really focus on to shift market prices to a great degree. But speaker-wise, you've got Constancio speaking, not on the economy or monetary policy, but nonetheless, Constancio is kind of viewed as the number two, if you like, at the ECB. So he will be speaking on macroprudential framework in Belgium in around an hour's time. ECB's Coer, no set time as yet, and in Lautenschlager more towards the European close. But yeah, not too much on the calendar for today or this week in its entirety. Okay, guys, I'm going to leave it at that. Really, it's just a digestion really of yesterday's news. Obviously, last week we closed with a negative close on the S&P stock index, only marginally, 0.017 on Friday night. That was post payrolls, and that meant that was the 9th consecutive down day. It's the first time that's happened since 1980. But by the kind of size of the move we've had with the gap, although I question some much of further upside from here on the way upwards, I would say we're probably likely to finish on a positive session and snap that streak by the time the session's out. Okay, guys, enjoy your day. Hope you had a good weekend. And just as a final reminder, in terms of the structure of how our coverage will work for Tuesday, we're going to wrap up on the mic at around 4:30 on Tuesday, and then we're going to come back into the office to reopen on the coverage on Trading Live from 11 p.m, and then I'm going to stay on all the way throughout the night. So more than welcome to join on the Trading Live platform.